We should be live on YouTube. It says you are live. When first person get over there, y'all hit the y'all put something in the chat, say we here, and we gonna go ahead and get into it. I just made something up on the fly in my head while I was in there fixing my lunch. So if y'all wanna see the screen, pull up on YouTube. If y'all wanna see the screen, pull up on YouTube. First person get over there, say we here, let's get it. I see some comments. Let me see what it say. Great afternoon, Tiffany. All right, let's get it. Let's get it. Let's get it. Okay, Tiffany, talking to you and only you. Market talk. That's what we doing today. Market talk. You feel me? What's up, Tranisha? Um, what I'm gonna do? Y'all remember the other night we did what's up, Travis? The other night we was going through looking at the trend of the sectors, right? Let me share my screen, share my tablet there, right? Y'all remember we was going through looking at the trend of the sectors, right? And now this the S&P. You know what I'm saying? Where my mouse at? There you go. Yes, yes, yes. Get out my way. This the spy. This the spy. And as you can see, we still clear in a clear downtrend. You remember the other night we was if y'all you choke your trade again today. Choke your trade. Hey man, I missed my trade today. I don't know if y'all seen my IG stories, but I missed my trade today, man. But as you see, we still in the clear downtrend, right? We still in the clear downtrend. And when we was looking at this the other day, we were it was the third right here. We were right here, right? We was right here the other day when we looked at the we was checking the trend on the different sectors, right? We was right here at on the third, and we was saying, we still ain't even test the downtrend yet. We still ain't test the downtrend yet, and we went through all 11 sectors, right? You feel me? And so what I did when I got finished cooking my lunch, what I did, I came in. Let me pull this into the screen so y'all can see it, right? So what I did, I came in and I looked at the 11 sectors to see where they are year to date, the year to date returns, right, and the weighting they got on the S&P 500, right. And if you look at the weighting of the top five, like what I like to call the market movers. You remember the other night when I was like, the market movers are struggling. All of the market movers, except for healthcare, was really struggling. You know what I'm saying? And finance is it was like being in just a channel. It's been consolidating, and then looking at finance today, they looking like they trying to break that consolidation to the downside. We're gonna look at that in a minute too, but if you can see here, like with the market, all the market movers that's in yellow, I like to call them market movers because they the top five. They got the most weight. And then look at tech. Tech, and this come from Yahoo Finance. I don't know how updated it is, but this come from Yahoo Finance. It's close enough because Yahoo Finance will say tech is 24% of the S&P. CNBC will say tech 31%. You know what I'm saying? It's close enough for government work. It's a heavy weighting on the S&P. And year to date, tech down 14%. You know what I'm saying? As of today. As of today, they down 14%. Right? Because if I pull up where my let me pull this up over here. Boom. Right? Pull this into the mix real quick. You see what I'm saying? Year to date. This the year to date. See the year to date on there? Right? The S&P year to date is down as of right now. Right? This as of today. Right? Let me hit refresh, see if anything changed on it. Right, that's the day. Change to year to date. Okay, so year to date, they showing you the close. As of this was like the close of Friday, but like it's lower than that today. It's lower than that 9.9. But looking at tech down almost 14%. And then tech weighs, let me see if I can put these side by side on this little tablet. Kind of hard to do with the tablet. Let me see if I can make this happen on the tablet. Boom. Boom. Okay. So tech is down 14% on the year to date. And tech way almost 25%, depending on who you ask, of the SPY. So if tech down that heavy, it ain't no surprise that we down that heavy, right? By waiting, who the next juggernaut, the next biggest waiting on there, financials. You know what I'm saying? Financials is down 5%. You know what I'm saying? See over here, 4.66. It's down 5% on the year. You know what I'm saying? Healthcare is number 3. Healthcare is down almost 6%. 6%, and it weighed 13%. You know what I'm saying? Consumer discretionary, XLY, some of the cousins' favorite. It's down 16% on the year, and it weighed 12% on the S&P. You know what I'm saying? Communication services, right? XLC, it's down 14% on the year, and it weighed 11%. You know what I'm saying? So between the top 5, right? I don't know if you can see that down here. You know what I'm saying? I don't know if you can see that down there, but that's like, that's it. The sum. Nah, that ain't right, cause that say 75. Let's add that up real quick. 24. Come here, mouse. Mouse acting crazy. Let's add that up real quick. I don't know why it's giving me that number. Probably cause the numbers that it's showing. 24, 14, 13, 12, 11. Oh, that is. That is. That is. It's right at the bottom. 74, 75%. So that is right. So the rest of it, the other 6 sectors, you know what I'm saying, only make up that other 25% of the S&P. So the top 5, the market movers, as I like to call them, make up 75% of the S&P. And all of them are like struggling right now. So, and when I sort this like by year-to-date returns, right? Largest to smallest, right? Energy thumping. You feel me? Energy thumping right now. But energy just barely almost 3% of the S&P. You know what I'm saying? Utility. The other night, I think we said utilities was like leading the charge of breaking out of the downtrend. You know what I'm saying? But utilities is less than 3% of the weighting of it. That's not a market mover. That's why XLE running like crazy. I mean, that's why XLE running like crazy, but it's less than 3% of the market. So that's why the market not rallying, right? What you say? Apple ain't coming down to 155. Be patient. It'll probably be the other way it's trading right now. And then, so let's look at what we was talking about the other night. Let's go to the chart. So the S&P overall. We got the S&P overall, right? Let's look at. We already know energy running, right? We already know energy running. XLE. Boom. See that? We already know it's running. It's pulling back a little bit now. This morning. Yeah, as you can see, this morning it was way up there somewhere, but it's pulling back a little bit now. But earlier this morning, this was another big green candle up here, because you can see that long wick. So it opened here, and it gapped up, and then at some point it was way up here. Then it started pulling back down, but energy still ain't nowhere near its. Let me see. Let's check that out right now. From where energy is right now down to the trend line. Boom. It's energy is what it is, 6% above the trend line right now. Energy is 6% above the trend line. XLU, we said, was it XLU that was leading the charge? Yes, XLU, and it's still clearly leading the charge of breaking its downtrend, because that's the trend line that we made the other night. I didn't delete it, right? That's the trend line we made the other night. So on the 3rd, we were right here. We was at this candle right here. And we said utilities was leading the charge to break its downtrend, right? It had already broke the trend line, and we were saying it needed to come up and break a previous high, and then come back down and a test toward this trend line and make a higher low. And as you can see, they not playing. Utilities ain't playing. It said I ain't gonna make a previous high. I'm going to making an all-time high. You feel? Utilities, but they let me see. Did they make it? No, they didn't make it. They real close. What's that high over there? That high right there is 71.83, and today they got up to 71.69. They almost made an all-time high today. Let me check that. Make sure that is all-time high. I'm gonna change it to monthly candles. Yep. Yep, they almost made an all-time high today. Utilities ain't playing no game. I told y'all utilities was leading the charge the other day, just looking at the chart. And I don't trade or do nothing with utilities. And it was leading the charge. So if you took heed to that, when we was talking about that on the 3rd and start looking for some utility companies to play some swings on, you doing real good right now. Shout out to anybody that did that. Let's look at XLP. That's number 3 on the year. XLP. Number 3 on the year. XLP is still consolidating. It's still consolidating. Ain't doing nothing but dig it. It's consolidating, but it's not trying to break its trend. Right? Let me do something. Let me see if I can do this real quick. Right? Take a quick snap of that right there. You see what I'm saying? Blow this up, son. I'll do that, Tim. How can I just move? There you go. God dog it, just move it. I want it moved for me. But anyway, God dog it. Don't say it when it don't. Make it small. Oh, there you go. I'm trying to. There you go. But right here, see this area here is not. See, it's not breaking lower than that yet. That's the bottom of the consolidation. Let me get a skinnier line. So boom. It's not breaking that. It's still consolidating in this range right here. It's a little bit big, Tim. You feel me? It's been consolidating in that range for a minute, and it's not breaking that range yet. So that's a good thing if you into, you know what I'm saying, consumer staples, but it's not breaking down yet like finance. We're going to look at finance in a minute. Finance look like it has started breaking down. What we doing next? And they next, finance, XLF. XLF is number 4 on the year. Boom. See what I'm saying? It looking like it's trying to break out of its trend. Make this a little bit bigger. Boom. Look like it's trying to break out of its trend right there. All right, you feel me? Blow this up some. There you go. Right here. This was the area. This was the bottom of the consolidation right here, where it was wicking down to that area there, where we had been consolidating. I went a little bit farther back than I wanted to. You know what I'm saying? Since the beginning, that's December. I went back to December. But you can see we was in that range, right? And we went down, we came to the bottom, came back up, didn't really make it up there. Then we came back down, and now it's looking like it's trying to break out to the bottom side. You see what I'm saying? We done broke that consolidation area, and we still pushing down. You feel me? We broke that consolidation area, and we still pushing down. It's pushing down, right? And we going up under. Yep, we testing these lows right here. If we keep breaking them lows there, XLF might start sliding. XLF might start sliding. Look like it's trying to slide. Who up next? Move this to the side. XLI, industrials. Right? Industrial still struggling with that trend line. They still struggling with that trend line. They right here on the 3rd when we was doing it, they had broke out. They passed the test here. They stayed above the next trading day, and then now here it is today. They opened above, but now they slipping below. And XLI They 8%. They 8%. So what that'll put them at like number 6. Yeah, that's the number 6 waiting on the yeah, cause you got 1, 2, 3, 4, 5. Yeah, that'll be number 6. They the 6th heaviest one on the SPY. Who next? XLV. Healthcare still they still above their downtrend line. Don't really seem like they going up or down. Look like they starting to. So from the third when we did it, gap down and then blasted up, and then gap down again today, and it's falling down. So that's 2 gap downs. So it's kind of heavy. You know what I'm saying? This sector trading kind of heavy. They didn't really hit this fair value gap right here. It didn't get to it, but they still trading kind of heavy. But they still are above its downtrend line. So it's showing signs that it might be a little bit of strength there relative to the market, because it's trying to show signs that it want to get out of its downtrend. You know what I'm saying? Who next? Materials. XLB. XLB. Oh yeah, they sucking. They still sucking. They was sucking the other night when we did it. We was here. We were saying they was getting close to see if it was gonna test it. The next day, gap down big, way down here. They gap down way down here. Tried to do a little something, but then again today they gap down a little bit and they selling off hard. So it's like, yeah, they sucking wind. Are we going? One thing about it is but now they below that. They below that area right there. So if they close below this area here, then it's looking a little heavy. Cause right there, that's really like the bottom of where everything was wicking to, except for this Russia day, I think it was, when everything gapped way down. But if you look, that was looking like it wanted to be the bottom right there. But now we below that, we fell below it, we come back a little bit. But if we close below that, it might be signs, hey, we still in the downtrend for basic materials. XLRE. This was like the second place one. Real estate was like the second place one the other night. It's still, doing relatively good. From the third when we did it, it just been going sideways. That's it. It's just been going sideways since the night we did it. It gapped down, then rebounded good, then gapped down slightly today, and it's selling off, but it's still within the same range. But it's staying above the trend line. So, but there's not a lot of, you know what I'm saying? It's not like XLU where it's a lot of participation. Instead, XLU about to make all new highs. They about to make all-time highs. It's a lot of participation going into XLU right now. Real estate, XL. We already know XLK sucking. We know XLK sucking. Boom. XLK out here looking like basic materials. We already know XLK sucking. XLC communicate, that's sucking. All the big boys sucking. Look, the 3 biggest position. No, healthcare. Healthcare is number 3. So number 1, number 3, and number 5. Let me sort it by weight. I'm clicking on that screen. I'm clicking on the wrong screen. Right. So number 1, 3, 4, and 5. 1, 3, 4, and 5 are all sucking big time. They all trying hard to keep dropping. And that's why SPY looking like it's looking right now. Looking like it's trying hard to drop. The only thing that's bumping and running is XLE. XLE doing good, but XLE only, what energy it is less than 3%. No, yeah, less than 3% weighting on the S&P. XL, what was the other one? XLU. XLU, all the money going into XLU right now. From the other night, like we said, XLU was leading the charge. Utilities, all the money going to utilities. You know what I'm saying? They rotating over there heavy. You know what I'm saying? But utilities is what? less than 3%. It's like 2.4. The only other thing that's way less than utilities is basic materials. Utilities at the bottom, they 10th out of the 11. You know what I'm saying? So it's what's the name? I look at Apple real quick. Somebody said something about Apple. Apple chart looking just like tech, which don't surprise me. Apple chart look just like tech because Apple way heavy on tech. You know what I'm saying? Let's look at the difference. XLK, boop. See, that's XLK, AAPL. They look real similar. Apple out here looking like tech. And you said you want Apple to come where? 155. Oh man, you had your entry on the Russia day. You missed your entry. You missed your entry on February 24th. That was the Russia day, man. They gave you your entry right there. You want lock, cock, ready to rock? Big B. When it dropped down to 155, it dropped all it dropped all the way down. It opened up at 152 that day. It opened up at 152.58 that day. That was your entry right there. You want lock, cock, ready to rock? I don't know. It might come back for you. I don't know. It might not give you a second chance, man. You might have to pick a new entry. You might have to pick a new entry. What this red candle is right here. You might want to look at 158 for best case scenario. 158, 159 for best case scenario. Unless we just really want to slide. Oh, it popped while you was at work. Yeah, man. It happened to the best of us. It happened to the best. I missed my trade today. Don't feel bad. I missed my trade today. It dropped into 150 twice in the past few weeks. You know, past 52 the same. Support. Yep. Oh, you was trying to get in Apple too, Tiffany? I see you say I ain't set my entry. I was thinking 158. You thinking 158? Yeah, I'll take that if you get down there. I take that as an entry if you get back down there. What you looking at, like options or shares? What you trying to get, options or shares? What you trying to get, options or shares? Pull this up while you doing that now. Let's go to bar chart. Barchart.com. Both? You looking at options and shares? Options and shares. What you looking at? Like in the money or out the money? What you looking at? In the money or out the money for your strike? All right. Let's just say let's just do it like this. If you're looking at a leap, let's say we're looking at like a 2-year play on Apple. And we're going to look at 5% out the money. Uh-oh. I'm tripping. I'm trying to move that and I'm looking at the wrong screen. All right, what Apple trading at? What it is? 162. Let's say 162. 162 plus 5%. So 170. 170 is 5% out, right? So let's see what 170 trading at right now. Let's see what a 170 strike trading at right now so we can get a feel for what 5% should be looking like. Option prices. And we're just going to look at, oh, you looking at 200? 2024 200? All right. So you're looking at 2024 200. You said 200. Let me get some more now. January 2024. All right. January 2024 200. It's going for 16.24 right now. Going for 16.24 right now. All right, so today Yesterday's last was 1650. Then today, look at that. It opened up higher today. What did Apple do today? Did Apple gap up today? Just slightly. It opened up. It opened up slightly. Okay. So that's why it went from. But look, it went from 1650 to 1705, just with that little small move up. All right. So if we trying to get down to 158, what's the deltas on this right here? Let's just say 40 cent deltas. All right. Where we at? 162, 162, 162 minus 158, $4. Let's do it the poor man way. Just gonna look at the deltas. 4 times. Let's say the delta was 36. 4 times 36. It's $1.44. So $1.50. Yep. So at least they need to have. If it get down to 158, just doing it the poor man way, you want that to drop at least $1.50, $1.50, $2 at least. That's just the poor man way. I like to look at. I just like to look at the deltas. We got like there's 40 cent deltas. I did 30 cent. So 4 times 40, that's $1.92. Yeah, so $2. I was in the ballpark. So anywhere from like 150, at least 150 or $2 off of the current price that it is right now. That's just the poor man way of doing it. You know what I'm saying? If you get $4 off, hey, is even more gravy to it. But that's just the poor man way I like to do it. Nah, I'm just looking. I was looking at something. Somebody, Big B was talking about looking at some Apple, wanting to get Apple if it get down to a certain price. Nah, I ain't. You already know I'm waiting. I already told you what I'm waiting for before I start looking at my leaps. I ain't trying to be the first one to the party, but I'll just, you know what I'm saying, showing the way I look at stuff. If it when I'm trying to get in, how I try to, project, do the poor man way of projecting the price. I just look at the deltas, and then I just subtract the deltas for however many dollar move that I'm expecting it to move. That just be my poor man way of like seeing what it's at. But you also got to remember, you got to play into fact stuff like implied volatility. You know what I'm saying? You got to worry about implied volatility, delta, the gamma, theta, all that stuff gonna make when price be moving volatile like it is now. You know what I'm saying? These option premiums be jumping around kind of crazy, but I still just like to get a ballpark to I just got to have a ballpark of like what to be expecting, so I know if they trying to snow me or not when it comes to the premium. But yeah, man, I just want to jump on real quick and just go through. You know what I'm saying? Look, I'm on the wrong screen again. I just wanted to go through like looking at what was going on with the market, since it was still the market still looking like it's in like a heavy downtrend. Where my mouse at, man? Give me my mouse. The market's still looking like it's in a heavy downtrend. Don't look like it's trying to break it no time soon. I don't like to guess at stuff. I like to, you know what I'm saying, see, I like to lift up the hood and look under the hood. I like to look at the motor, see what's going on. You feel me? And since the SPY is selling down hard, I said, okay, let me go through and look at the different sectors, you know what I'm saying, and look at it by weighting. You feel me? Look at it by weighting and looking at the top five, tech, finance, healthcare, consumer discretionary, and communication services. Those are the top five. According to Yahoo Finance, they make up 75% of the S&P. You feel me? Those sectors make up 75%, and all of them sectors are down. You feel me? Except for healthcare and finance. And finance looking like they finna take their turn. They looking like they finna take their hit based off of what we was looking at on the chart. Finance looking like they ready to take their hit, because finance, you know what I'm saying, when we started the year off, finance it's not down as much as everybody else. Finance only down 5% on the year. You know what I'm saying? So finance hasn't had, you know what I'm saying, its turn in the sun as far as correction wise. You know what I'm saying? And then right here, right there where that line is, finance looking like they getting ready to break down. So finance looking like they getting ready to have their fun in the sun. You feel me? And finance is one of the top five. They one of the big boys that put a weight on the S&P. The only thing that's really gonna help the S&P start to pop if finance start falling off is if tech, healthcare, and the other top five, they say, okay, we tired of our downtrend, we fun to pull up out of it. But hey, without them top five, we ain't gonna be hitting no all-time highs. You feel me? You feel me? We ain't gonna be hitting no all-time highs. Healthcare showing signs that hey, they ready to end this downtrend, but they ain't got a whole lot of support like utilities. Look at the support utilities got. Utilities from the bus are all new high. That utilities got a whole lot of support. Relative strength to the market, utilities got a lot of relative strength. You feel me? But healthcare, they don't have a lot of they relatively stronger than the market, but they don't have that strength that utilities got. Healthcare, did I say healthcare? Yeah, healthcare, they stronger than the market per se, because they looking like they trying to break their downtrend, but they don't have that strength that utility have. You know what I'm saying? Just like real estate. Real estate, if I hit the right thing, real estate, you know what I'm saying? I know a lot of people probably look at this just for like dividend plays and stuff like that. And real estate ain't don't put no heavy bearing on the market, but they looking like they ready to come out of this downtrend. You know what I'm saying? They ready to break this downtrend. Cause real estate, let me see how far real estate fell from the high. Boom. Real estate hit almost 18%. They dropped almost 18%, but real estate showing signs like, hey, we tired of this, man. We ready to get up out of this. We ready to get up out of this downtrend, man. Got dog it to him. Got dog it. Trying to see what. That thing showing 12%. What they talk about it down 5%? That thing showed 5%. I just showed year to date. Yeah, 5%. And from January, let me see. Did I not click on the right thing? Did I go back too far? I must have went back too far. No, I ain't go back too far. Oh, from the open. Nah, I'm going from the high. From the open. That's what it is. Those the numbers from the open. I'm tripping. All right. Grab that. Jesus Christ. Okay. Okay, those the numbers from the open. All right. There you go. I'm like, wait a minute now. I know I can. Yeah, from the yearly open. Okay, there we go. All right. There we go. All right, that makes sense now. But that still say 8%. Oh, from the close. Let me see. Where was it? Yeah, 5%. There you go. From the close yesterday. So now they down 8% today. All right. From the close, they was at 5%. Then boom, 8%. So they only down. Yeah, that's today. But I forgot it's from the last close. So 5%. Yeah, boom. So that's right. I'm like, man, they numbers ain't right. But they numbers right. They good. They ain't hitting us with the 52 fake out. But yeah. Anyway, man. That's all I want to do. Anybody got anything else before I tap out? Anybody got anything else before I tap out? Anything else y'all want to look at before I tap out? I just want to look. I like to know the why. I like to know the why. Why is the market trading the way it's trading? You know what I'm saying? When do it look like we gonna be getting out of this? And right now, the top five ain't showing me nothing. The top five ain't showing me nothing. Yep. Did I go through to see what the top five, how close the top five were? Did I go through that to see how close the top five were? We already know XLK. We already know XLF looking like they're trying to break down. XLV, we looked at that. XLV, we looked at that. Email. If I put in the right one. Oh yeah, XLV trying. Yeah, XLV trying. XLY not trying. We know that. XLC not trying. We know that. So all of the top five, except for XLV, not trying at all. XLV the only one in the top five that's trying to break the downtrend. Everybody else not trying. All right, y'all. Y'all ain't got nothing else. Nobody got nothing else. I appreciate you. Doc, give you a couple weeks on what? We talking. Give you a couple weeks on. Talk about looking at leaps. Talk about looking at leaps. You still on him? Anyway, I don't see nothing popping in, man. I ain't gonna hold y'all up. Been on here 36 minutes. Go ahead and jump off. Appreciate y'all. That's it. Till the next time. Y'all know what it is, man. Oh. Yep. Gone. Yep. Don't want to end. It don't want to end.
The world's second largest cryptocurrency and arguably
It don't want to end the broadcast.